Good morning and welcome to Join the Dots. Well, yesterday I took a really serious and hard look at the Chinese economy and the facts, not the fiction. And I hope you were able to follow me in joining the dots to everything we said about the Chinese slowdown, the risks in the credit markets, the banking system throughout the world, as we see a 47 trillion hole probably get larger. Now today I'm going to switch to America, just to make sure that no people here think I'm just a one-trick pony. I'm not. I'm doing macroeconomics across the globe. We've talked about China, that's the number 2 economy. It has its own special reasons for being so important to your future, i.e. a 47 trillion hole in the global banking system. Cannot be forgiven, cannot be forgotten. Has to be dealt with, and it will be. Now let's turn to America, the number 1 economy in the world. Now, for this, I go to many sites and receive information, review information. One site I particularly like, which I've mentioned to you before, is that of Eurodollar University. Description in the link below. Okay, this is a fundamental episode of Eurodollar University, quoting statistics from the US government. Okay, quoting up-to-date statistics from the Bureau of Economic Analysis, BEA. Okay. So not made up stats, not data that someone's put together. This is the Bureau of Economic Analysis of the US government. Okay. To complement that information, we have real life, real time market information from the bellwether stock for the US economy, which you should be able to guess. Yes, it's FedEx. FedEx is the bellwether. Because when it starts to turn down, you know the economy is turning down, because what does it do? It moves goods through the economy, out of the economy, into the economy. And if that is slowing down, the economy is slowing down. It's that simple. Okay. So what's happened to FedEx? Now, when you talk about markets, you always get told markets anticipate. And yes, they do. Markets anticipate. So we're now at an all-time high in the S&P, around 6,250. And yet FedEx, in the last 12 months, their share price has fallen 24%. The market knows, it has an instinct, it feels it. Okay? And the price earnings of FedEx, whereas the market is trading at a lofty 26, 27 times on average, and believe me, that average is massively distorted. If you were to take the top 10 out, you'd probably be trading somewhere, I don't know, 17, 18, but you wouldn't be anywhere near 26, 28, because those top 10 stocks are completely distorting your view of what the US economy is truly worth and valued at. We saw this in .com, we're seeing it again now. Okay, don't be fooled. Join the real dots. So let's have a look at the real dots. We can't. What they're realising is the consumer, rather like the Chinese consumer, is tapped out. He has no more, she, they have no more spending ability. So they're cutting back. And we've seen that over the last, I think it's the last 5 months. The real consumer spending is falling for the last 5 months. The only time that happened before, in the whole of the 2010s, in the whole 10 year, the whole decade, was in 5 months to December 2018. Okay? Get that into your head, the perspective. The perspective is this is the worst economic activity by the consumer since 2018. And we go back then to 2010 and obviously the GFC. This is what we're faced with. This is the truth, okay? These are the truths from which we can join the dots to predict or more predict the future and what we need to do in strategy terms to avoid getting caught and losing an awful lot of money. So FedEx is down 24% in the last year. It's just a fact. And that's the market telling you. Okay? The US-China trade, well, here's a link. Here's another dot to join. The US-China trade route has deteriorated sharply. Well, no surprise there. Was there really no surprise there? Okay. And what do we see when companies start to go through this? Well, what we're seeing FedEx doing is now cutting its capital. It doesn't have a lot of staff that it can actually cut easily without threatening its whole business model. So it is cutting capital expenditure, and its capex is now at the lowest ratio in its history. I kid you not. History. How old is FedEx? Okay, the capital expenditure ratio is at the lowest in its history. Can you join some dots here? I can. Okay, it is nothing to do with tariffs. That was their distraction for you. That was for you to look over here, not over there. Tariffs, oh, easy, dismiss, problem gone. Not tariffs. Something fundamental. We need to investigate this further. We need to join more dots here. We've got a problem, Houston. So employment perceptions. This is all from the Bureau of Economic Analysis. The employment perceptions are down. Opportunities are down and threats are up. You all know the opportunities and threats. The opportunities are down and the threats to employment are up. It's not a good balance. And it's not a good position for the market as a whole. Now, let's be careful. Let's bring in some new dots here, because we're about to see the big, beautiful bill, BBB. Ironically, the same initials as Biden's Build Back Better. Weird, isn't it? Triple B, something. We won't join those dots yet. Okay. So the employment perceptions are down. China is a market that's going to fall because of consumption there. So US sales to China will fall, of course. But more importantly now, what we're seeing is internally in America, sales are falling. I will refer you to Gregory Mannarino. I will, because he's been right. Okay? He has been right for the last year when he's been screaming that that economic activity is slowing across the globe at the fastest pace on record. But the stock market deceives you, doesn't it? However, be very careful of the stock market, because with that plan for Trump, okay, with the big beautiful bill, it is very easy to see a sugar high coming in the stock market, in the S&P, in the Dow, in the Nasdaq. It's very easy to see a 400, 500, 600 point rise, 10% on the S&P. Very easy. So as I've said before, I do not trade. I do not trade. So what I'm giving you is macro views. It is not daily trading views. The macro view is the economy is contracting at its fastest pace on record in real time. And it was nothing to do with the tariffs. In fact, as the tariffs start to hit and companies can't pass on the increases due to the tariffs, they're going to have lower margins, aren't they? And lower margins equals lower profits, unless they cut costs. So if you join the dots through that equation, you end up with companies having to shed staff in order to maintain margins and profits in a very difficult situation. But laying those staff off leaves those staff with no income, doesn't it? So what happens to consumption in the economy? Well, yes, you can see it. It's falling. And stage by stage by stage, as you join the dots through the macroeconomic forces at play, globally, locally, just everywhere, it's falling, okay? It's falling. So the total income in May 25 for US fell 0.42%. It fell. Didn't go up, it fell. And this is in a time when inflation, and I've talked about this before, okay, inflation for the lowest 50% of society is wicked, because you're seeing inflation in food, you're seeing it in housing, and you're seeing it in fuel. And those are the three ingredients that most of the people in the economy have to live with and have to pay for, and use all their money to pay for each month. They use all their money. Okay, it's a very dangerous time for those people. And so, logically, as you join the dots through this process, income falling, companies falling profits. FedEx have now announced, by the way, that they're not going to give guidance for the rest of the year. When do you announce that you're not going to give guidance? Well, it's when you've got a real problem. You don't suspend guidance when you've got good news. You don't do it. You flirt with the good news. You get it out there. You promote yourself. You promote your stock. When it's bad, what do? You shut down. You don't give any information. You don't give any guidance. Okay? And that's what's happening. Now, in America, the local authorities are facing real problems with employment, with budgets. Didn't I hear that in China yesterday? I think I did. Nowhere is going to be spared. No country is going to be spared. What I want you to do, please, is listen to this Eurodollar University link in the description below. It's all data. It's all facts. It's no noise. Bloomberg, CNBC, noisy contributors, noisy people shouting at you, telling you not to worry, They said that in the middle of 2008. And there was I calling a global financial crisis in the middle of 2007. Because I could see it, I could feel it. We are there again, but this time the geopolitics, the politics, the global, the mistrust. Join those dots. There is no easy way out of this. Okay? But be careful if you're trading, because the market could easily get a sugar high, which will only give it more ammunition to collapse afterwards from the big beautiful bill. And this Friday we have Trump's July the 4th Independence Day announcement. It's going to be a big one for crypto, I can tell you that. So look out for that. But for now, thank you very much, and I hope you can now join more dots. The week we started with was all the foundations. It was all the things that are going to influence us, and now I'm beginning to show you those dots as they appear towards the surface. Okay, thank you very much for watching Eurodollar University. Please open it and watch it. Thank you very much.